All of us here are so happy you're joining us this week on Retiring Well. We got a great show mapped out for you, and we're going to dive right into things. First, we have an offer for you and a free giveaway this week for being a loyal watcher of the show. We're going to talk about inflation in your retirement. You're going to be able to go onto our website and download a free giveaway that we believe is going to help you. Then we're going to talk about IRA ownership. You have your names on the statement, right? But are you the only owner of that? Maybe, maybe not as well. Then we're going to get into growth versus value stocks. What are the differences of those? What are the similarities? And how does that relate to your retirement planning? And finally, to wrap up the show, don't be sold. Oftentimes you may walk into a place and feel like you're being sold something. Don't be in that situation when it comes to retirement planning and investing.
Retiring Well. Brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well. Plan to retire well.
Inflation, something that seems to be talked about every single day and that most of you are probably feeling every day in some aspect. You know, what is inflation? Well, it's kind of like the shrinking dollar, if you will, right? The money in your pocket isn't going as far as it used to, whether that's at the grocery store, at the gas pump, or other places that you're buying goods and services, right? There's rising cost. So when you're retired, it plays a little different role, or there's maybe some different concerns you have to worry about. So here at Centennial Wealth Advisory, we've put together this white paper, Inflation in Your Retirement. So we want to offer this to you free at no cost, and it's available on our website. So you can go there right now, cen-wealth.com, and download this right to you. And it's an instant download. It will come to you, and you can read through this. In this thing that we put together, it's about 12 pages long, and it talks about what is inflation. Why is that? One of the interesting things is it has almost like a little shopping cart built in there, and it looks back at prices about 20 years ago and says, if I went into a store and bought these particular items, what would my total bill be? And then what would that be today? And as many of you know, you've gone and bought groceries, right? That bag of groceries you walk out with is dramatically changed. You know, a funny story for me is, you know, normally my wife does all of our shopping and for our family and stuff like that, so I haven't walked into a grocery store in years, it feels like. She sent me in the other day to just pick up a couple odds and ends, and I picked up, I think it was lunch meat or something, and I was shocked at the price. I talk about inflation all the time with our clients and our reviews and talk about it on the television show here, but until you see it and visualize it and feel it in person, you know, I walked out, I think, with 2 plastic grocery bags, and I felt like I hardly had anything, and it was close to $100. I mean, inflation is real and it's happening all over. And what can you do as a retirement? At the end of this 12-page thing, there's 5 tips that you can do right away. And one of those tips is talk to your financial advisor. Make sure you have a plan with this. How should your financial plan be adjusted, or does it need to be adjusted for this rising cost? What is your budget? How has your budget changed because of inflation? You know, oftentimes, you know, when you look at it, a rising foods cost, rising energy costs, you know, what was that? If we're living on a fixed income before, you know, and with, you know, investments and all that, how are this going to play a role? So again, here at Centennial Wealth Advisory, for all of you who's watching the television show out there, we offer a free no obligations visit to come in and meet with one of our advisors in any of our office locations, Cadillac, Gaylord, Petoskey, and Traverse City. And this is one of the things that we want to talk about and talk through how this is affecting your plan, because we don't want inflation to change your retirement. We want it to be mapped out so you can plan to retire well.
So, hey Nick, when a prospect comes into your office and says, hey, my #1 fear is inflation, how do you respond to that?
That's a great question, Jack. So what I would do is I'd run them through our retirement analyzer program. So this software program puts all the numbers to the road, including inflation. I like to run it at about 3%. It might be a little bit high, but historical average is right around that, okay? So we put in the numbers and we say, okay, if we have inflation running at 3% for the next 20 years, what does that look like? What are your expenses going to be at that inflation rate? I actually just did a case where a couple, they had $5,000 was their expenses now on a monthly basis, but 20 years from now at a 3% inflation was close to $10,000, okay? So what do we do to prepare for that, Jack?
So, you know, that's where we look at the different investments that you have. You know, we're going to look at how are you invested, what kind of yield are those producing. We also have on our website, cen-wealth.com, a free, no obligation, hey, here's some learning for you. At the end of it, it's going to give you those potential strategies where you can go to our website, download it for free, and you can start teaching yourself what's out there. But from a strategy standpoint, I love it when we can pinpoint the purpose of the position. That's where I have seen the most peace come. That's where I've seen the best probability of success come from, where we're gonna be able to say, listen, this is gonna be some certain income needs for the immediate future, a 1 year, a 2 year, a 3 year plan of funds that are sitting there. It's not related to market risk, and it's going to supply those income. And then we're going to say maybe it's important to look at some of those stock positions. You know, we have a dividend strategy where it's comprised of only the highest paying dividend companies in the market. The rule is that they have to be increasing their dividend or paying the highest. Otherwise, they get kicked out of the portfolio. You know, where does that come into play? So if you're sitting there and you're worried about inflation, if you don't feel like you have a plan, please feel free to go to our website, give us a call. We would love to meet you and try to help. Stay tuned. Coming up next, we're going to be talking about IRA ownership and growth versus value stocks. You don't want to miss it.
The biggest concerns that clients have when they come to see us is usually the fear of the unknown. When they're heading into retirement, there is so many uncertainties that they're going to face, not only financially, but with time, with insurances, with taxes.
You figure you've got one chance to do it and you better do it right.
With that fear of unknown, they're looking for somebody to walk alongside them in this journey and to guide them along the way.
Retirement's like 20 to 30 years of unemployment, so you need to have a plan in place to generate that income.
We can help eliminate some of those unknowns and give them the confidence that they're going to be able to succeed in the goals they want to do in retirement.
We want you to have your finances in order so that that's more of an afterthought, more of something that you say, well, that's what our team at Centennial Wealth Advisory is there to take care of.
Too often, our industry focuses on the tools that are available in mutual funds and stocks and bonds, and oftentimes the industry wants to start with a product. We believe here that you should focus on the individual's goals first. What do you want to do in retirement? What does that look like to you? Then what strategies do we need to implement to make those goals become a reality?
So often we find that our clients love spending time with their family, with their grandchildren. Here in northern Michigan, people love to be outside and enjoy kayaking or biking or hiking in the warmer months, sometimes in the winter months as well, out snowshoeing. Our hope at Centennial Wealth Advisory is to help you open up those opportunities to go and enjoy your retirement.
As a financial advisor, it's not just my job to manage just your money. It's my job to understand who you are as a person, your personal relationships, your aspirations and goals, and so I can help create a plan that ties your financial future with your personal future and all those goals.
You want to retire, you get one opportunity to retire, and you want to do it right the first time. Our role here at Centennial Wealth Advisory is to help walk you through that entire process and ultimately help you plan to retire well.
One of the biggest mistakes that we see commonly involves taxes and planning, or the lack thereof. So primarily it's dealing with your IRA, 401k, 403b, those assets that you've contributed to and gotten some tax deductions along the way, but now as you want to take withdrawals from are going to be fully taxable. So let's imagine for a moment you have $500,000 showing on your retirement account statement. So you're looking at that, feeling pretty good about yourself. But what if you decided, oh, I've really wanted to buy this second home, and that's been your dream. So, well, I've got this $500,000 account. I could just use that to buy the home, right? Well, not quite so fast on that one. So if you cash it out and try to walk away, well, let's imagine for a moment the lump sum you're going to receive from that $500,000 after taxes, let's just say is $350,000. So where'd that other $150,000 go? Well, the IRS needs their share, and so when you look at your IRA statement, is that money that's showing up on the statement really all yours? The way I look at this is sort of like a business relationship. You have a partner within your retirement account, whether you like it or not. They're a piece of that, and as you grow your business or your retirement savings, then you're also then building up the IRS's side of this business. So. Everyone's been taught, though, oh, contribute into the retirement accounts. It's going to be the best thing that you've ever done, which I'm not saying that that's not the case. It can be a valuable way to do that, but you have to consider the tax implications of that over the long run. So in our example earlier, we talked about the $500,000 and how you essentially own 70%, IRS owns 30%. Again, just an example. But what if that $500,000 now grows to $2 million because you've been this savvy investor and over the years invested so wisely? Well, the more income that you have, then the higher percentage you're going to be taxed. And so now let's say at $2 million mark, now you own, say, about 60%, while meanwhile the IRS owns 40%. So again, IRS made out pretty good on that deal as you grew that retirement savings and grew the tax implication. So the good news is, though, you can ultimately buy out your partner using Roth conversion strategies. Again, this may not be for everyone, and there's strategic ways to go about that that you would want to be factoring in. So here at Centennial Wealth Advisory, tax planning is a vital piece of our overall retirement planning strategies. So we encourage you to give us a call and help you plan to retire well.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, and to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
One of the draws for me to transition from teaching to this job was that one of the platforms we have is a weekly TV show. And every single week, we get to get in front of a lot of people and inform them about what's out there, what markets do, what products are available, what services we offer. And so it's teaching, and we're constantly teaching, and it's no cost. And so I love that piece of it, is that what we're doing outside of our daily work is that we're also continually trying to add value to, the people of Northern Michigan through our TV show. And there was a conference that I went to. It was in Hawaii. It was awesome. AE put it on, and we went to a sunrise service put on by some local Hawaiians. And they said one of their daily activities is to learn something new and give it away. That was a part of their culture. And when I heard that, I thought, that is so cool. And a lot of times that's what we get to do. We get to learn something new, and then we get to give it away for free. I think it's an awesome, transition from teaching to teaching, just in different platforms.
Have you ever asked yourself what's a better investment, growth or value stocks? Maybe you've never even considered that or not really familiar with growth or value, what that really means. So growth stocks have the potential to ultimately outperform the overall market because of future potential. And meanwhile, value stocks are those that are trading below what the analysts believe they're really worth, and so there's potential there for maybe a greater return. So growth stocks can be in small, mid, or large cap sectors, and they remain a growth stock until analysts sort of say that, oh, this stock has reached its potential, so it's no longer in that growth category. And companies experiencing significant expansion or growth, maybe through a product or a line of products, would be factored into what would be a growth stock. Or maybe they appear to be better run than their competitors and they gain an edge in the overall market. Now, value stocks are typically going to be larger, more well-established companies that are trading below what analysts believe are their expected price. For example, let's say the book value of a company's stock is $30 a share based on the number of shares outstanding divided by the company's capitalization. If that stock's trading, say, at $20 a share, well, the analysts would say that that's a good value. They expect it to get to $30, but it's only selling for $20. And what might push a stock price down? Well, perhaps public perception. Maybe there's a higher up in a company that was involved in some type of scandal that's driven down the price of the stock, but ultimately the company's financials are still in good order and helping the business, and eventually that's what's going to drive that stock price back up. So theoretically, value stocks may have a lower level of risk and volatility just because it's a larger company, it's maybe more well established. And another factor with value stocks is they'll typically pay dividends. So they're going to pay some type of consistent income to you as being an investor in that stock. So for the first decade of the 2000s, we saw that value stocks were outperforming the growth stocks. Now, meanwhile, since about 2010, all of a sudden the growth stocks were outperforming value stocks. So you see over time that there's certain times in history where certain sectors of the market and these value versus growth stocks may perform better. Again, it's something that here at Centennial Wealth Advisory we believe in active money management. So we're looking at money managers that are factoring in, is value or growth a better place to be? And I don't know if that's what's in your portfolio, so it may be worth getting a second opinion. We welcome you to give us a call.
Hey, great segment on IRA ownership. You know, I think sometimes people need to come to realization that they might see only their name on their IRA statement, but if it's IRA, you're not the sole owner of that. You know, so Nick, who is the partner in that account?
It might mean individual retirement account, but there's more than one individual involved in that account, and that's Uncle Sam, right? You've been deferring those taxes for however long, which is a good thing in a sense, right? Because typically during your working years, you're earning more, so maybe you're in a higher tax bracket, so you haven't been paying Uncle Sam. Well, that time comes when you're going to take money out from that IRA or 401k, where Uncle Sam wants his take, okay? So he's that partner in your IRA or your 401k. But oftentimes, once you retire, your income might be a little bit lower, so that's where the case can be made is, yeah, that's a better time to take money from the IRA because you're in a lower tax bracket, and hopefully you're not paying as much as you would have been had you paid taxes on that when you were actually working. But it's just a good practice to remember, you're not the individual owner of that retirement account. Uncle Sam's in there as well.
Hey, and another thing that we talked about was the difference between growth stocks and value stocks. I love the chart that shows kind of the historical timeline of when growth outperformed and when value stocks outperformed. What we get to do here at Centennial Wealth is we get to teach you about all the different strategies that might focus on that. But we also have strategies that are very tactical, that they can actually adjust. Hey, if it's a season where those growth stocks are doing better, our investment strategies can follow that. And if the economy and different parts of the investment landscape change to where value have a better chance of outperforming, we can change and take a different approach to those value stocks. So thank you so much for tuning in and learning about IRA ownership and the difference between growth stocks and value stocks. But hey, stay tuned. Coming up next, we don't want you to be sold.
The culture in our office is phenomenal. We empower our team to be problem solvers. Oftentimes in this industry, things are going to change. So our team is empowered here to make decisions and to be able to problem solve for you. We have a lot of fun at the office, and we're a close group. When you call here, you get a person, and that culture shines through.
Relationships are so key when it comes to anything in life, and so here at Centennial Wealth Advisory, we focus a lot on team approach. We've started the Centennial Wealth Health Club.
We go down to the beach, we play some beach volleyball, some cornhole. Great time to just get together, relax with the team, but also get a little competitive as well.
It opens up those relationships to really get to know each other well. Building trust, the best definition that we've heard is consistency over time, and that's something that initially you can't get with a first meeting with someone, but as time evolves and our clients are working with us, they not only experience that with the financial advisory team, but also our tax team and health insurance team that all work together to ensure that they have a lifelong plan that they can count on.
It's a neat culture here in a small office. You don't necessarily have a lot of that corporate overhead. If we have a client who wants certain services, we can certainly offer those services, but go above and beyond with some of the other things that we do.
Confidence is something hard to put a price tag on. Finances don't just end with finances. Finances flow over into relationships, into daily emotions. And so when you can teach and you can get them to understand and they can find that confidence and you bring them to that, that's so rewarding.
I do think that what we're doing here is important. A lot of people think that they're fine, but they've never really looked into it. So if people can do more to be able to help themselves live a more fun and enjoyable retirement, but also to be able to take care of themselves, then it benefits the whole community.
If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Have you ever walked into a store or maybe a dealership or somewhere where you're looking at buying something and you feel like you're almost being attacked, like you're a piece of fresh meat and you're like, wow, this person really wants me to buy this? You're being sold, right? Somebody is pushing something onto you because they want to sell you something. And that's not a great feeling, is it? We've probably all been in that. My wife and I were shopping for something recently, and we walked into this place, and it felt like, we were being swarmed by these sales individuals. And it makes you uncomfortable because they're trying to kind of, in many cases, push you to a quick decision, and then you start wondering, well, why do they want me to buy this so bad? When we think about this with investments and talking to financial advisors, unfortunately, I think oftentimes in this industry, an advisor wants to sell you a product. Well, before you buy anything or before you invest in anything, take a step back and understand what are you investing in, what are you buying, and how does that fit? You've heard us talk about this on the show before: goals, strategies, and tools. In my mind, tools are the investment products. These are all the various things you can buy: stocks, bonds, mutual funds, annuities, all the likes, right? Those are all the different tools we advisors have available. Strategies is the plans that you have in place. What is your income strategy? What is your investment strategy? What is your tax strategy? Estate, long-term care, health care, legacy. All these things are strategies that you should have in place, especially headed into retirement. And goals. That's you. What are you trying to accomplish? Is it retirement? And if so, in retirement, what do you want to do? Is it travel, grandkids, philanthropic stuff, hobbies? What is that? So before you buy something or before you get sold something, make sure you understand and have in place your strategies, but make sure this is meeting you. If somebody is trying to offer you an investment on something before they ask any questions about you, you're being sold something. So make sure these discussions are centered around you and what you're trying to accomplish. There's nothing more I enjoy about hearing people come in for the office the first time and their eyes are light up because they see retirement on the horizon, and they start talking about these retirement goals and these things you've worked so hard for, and you're hoping now you have the time to be able to do that. Give us a call at the number on the screen. I'd love to sit down and talk about your goals with you, and all of our advisors would love to hear your stories about that, so we can help you map out those strategies and figure out what investment tools need to be put in to make sure your goals become a reality.
Hey, don't be sold. What a great segment. It's something that is near and dear to us here at Centennial Wealth Advisory, because we see in this industry a lot of times people are just sold something. Recently in the Cadillac office, I had some prospects come in and they sat down, and the first thing that they said to me was, okay, what do you have to sell us? And I kind of went back a little bit and I said, well, actually, I have no idea. I don't know you at all. I can't even begin to give you advice or explain what might be a good fit for you because I don't know you. And what I've realized is the more puzzle pieces that we can gather about what you're trying to accomplish, what your current situation is, the better advice that we get. But sometimes it's awkward at the beginning because you don't know us, we don't know you, and people are protective of their financial information. Well, that's why I love that we get to teach you each and every week. We get to teach what's out there. We don't have any kind of agenda. We want to let you know that we enjoy what we do because we want to bring value to our clients. We might never meet you, but we hope we can bring value through our TV show. We want to teach what's out there, let you understand what your options are, and then you get to decide. You never have to worry about pressure or anything like that. Nick, I know that means a lot to you too, and what you find.
There's no silver bullet out there as far as investment vehicle, okay? Everyone is different. There's pros and cons to each one. It's more about lining up those investment tools to whatever your goals are in retirement. With every investment tool, there's a good and there's also a bad. So, like for example, let's take a fixed annuity. Okay, the good is you get a guaranteed rate of return for that product. The bad, you got to tie up your money for a specific period of time. Okay, but most importantly, does that product meet whatever your goals are? And that's where we're going to start with here at Centennial Wealth. Before we go over all these different products, we're going to learn what your goals are, and then we're going to teach you about each and every individual product that we have at our disposal. Okay, and being we're independent, we can shop around and find the best products that are out there to meet your needs. Hopefully you found this episode valuable. We went over a lot of great information. Don't forget to check out online at YouTube/Retiring Well. Lots of more great information out there for you in your spare time. All right, come back next week, same time, same station. We'll see you then.